Welcome to the August 16, 2019 video version of the Wagner Daily. My name is Rick Petticelli, and once a week, this video replaces the written commentary portion of our report. And hopefully, this video offers some insight as how we set up our charts, how we look at charts, what indicators we use, etc. And offers a nice change of pace from our usual report. So let's get to the charts. First up is the NASDAQ Composite. On 8/13, the NASDAQ produced a follow-through day which generated a buy signal in our market timing model. The buy signal was a 2% up day on higher volume. Although the follow-through day was into resistance, that's going to happen from time to time, as the last follow-through day was on 6/7, and then the very next day we're into a ton of resistance up here on a 610. So there was a 6-7 follow through day, then a gap up. So right away we're up into resistance, but it did succeed and rally higher for several weeks. 813 follow through day led to a distribution day the very next day. Whenever there's distribution right after a follow through day, the odds on the follow through day working are almost non-existent. And so this just increases the odds of the market not sitting on a higher low here. And if this low is taken out, our market timing model will shift back into sell mode. And then we'll have to wait for another follow-through day before we can look to go long. As far as where the market is headed in the short term, it sure looks as though the NASDAQ will have to eventually test the 200 MA before this correction is over. Now in the short term, we would avoid entering anything on the long side, as market conditions are just not reliable enough to trade our type of stocks. So it's best to sit in cash right now and just wait for conditions to improve. As far as short setups, I think the chance to short was basically up into resistance here. Shorting down here is going to be tough, as the NASDAQ is about 1.9%, 1.8% away from the 200 MA and about 3.5% away from resistance. So 3.5 to 4% away. So it's almost in the middle of this range here. So unless there's some sort of 2 to 3 day bounce up, we probably won't be looking to do anything on the short side. On to current open positions. We only have two very small long positions on right now, and they were established on 8/8 after this bullish reversal bar on 8/7. So based on this reversal action, we decided to get long two stocks with small position size, only 5%. MedPace was a buy entry over 78. It triggered and didn't go anywhere, which is to be expected, I guess, now that the fall through day failed. But we didn't know that at the time of our entry, so we entered around 78 bucks. We stopped out of half the position beneath the low of 8.8, but we still have the other half on, with the stop currently beneath the low of 8.6. And again, this is a small 5% position. And the other long is Twitter, which we entered around 42.27 over the 3-day high. It failed to fall through and has pulled back in. Our stop is beneath the 20-day EMA and the low of 8.5, which is a pretty good stop because Twitter did close below the 20-day EMA today on a pickup in volume. So if it follows through lower tomorrow, we'll likely stop out of the position. And again, it was a smaller 5% position. So that's it for long positions. Again, we were in cash prior to 8.7, and we decided to jump back into the market to test the waters with small size. In terms of what's out there, what we're looking at right now, let me run through a few setups that we think could potentially be in play once conditions settle down. And those are, one, MedP, which is still looking pretty good. If it can't hold the 9 MA, then look for the 20-day EMA to hold. Again, something to keep an eye on. DXCM is pretty powerful. A little false breakout here and then pull back and now move up. And it looks like it tried to move out on Thursday on a pickup in volume, which is incredible given how bad market conditions are. Notice here that the RS line is already pushing above the highs of the range. PAGS is holding up above the 50-day MA. Looking at the weekly chart here on the right side, we see a 1, 2, 3 week consolidation so far. So if it continues to chop around in a tight range here, we look for a Potential pullback entry off the 10-week or breakout entry above range highs. Pins gapped up on heavy volume and is trying to hold up. It lost the 10-day MA here, the rising 10-day MA, but we still don't mind monitoring the price action as long as the 20-day EMA holds. So if the price can hold above 31 here, it could emerge as a leader down the road once the market settles down. NZM here is still near the 50 MA. If market conditions were strong, we look to buy over this 96 area with the stop beneath 89. However, the way the market is right now, this could easily break the 2-day low and sell off sharply. So again, we're just watching these stocks right now. Nothing going on. GH has pulled back into the 20-day EMA where it's found support. That's also just on top of the highs of the prior breakout pivot high. So this area seems to be support. A very tight inside day on Thursday. In a bullish market, we would look to enter above Thursday's high. So probably around 99.65.70. And the last stock we're looking at, and this is just a handful of charts we're looking at right now. I probably have 25, 30 on the list. And we probably went over 5 or 6 of them here. ARWR is sitting in a pretty tight range. Let's see how it holds up over the next few days. It could be something that's also in play within the next week or two once the market settles down. As you can see here, the price has failed to move to a new high, but the relative strength line has already moved to new high. So just a quick recap here. The 8/13 follow-through day has not worked out well so far. The distribution day following the follow-through was a very negative sign and suggests that the odds have increased now that the market will set another swing low, a lower swing low. There's no reason that we can think of to go long unless you're a day trader. So for trend traders, there's just not much to do right now. On the long side, on the short side, as we mentioned earlier, we like to see some sort of bounce in the market to produce lower risk entry points. So for the most part, trend traders right now are just in SOH mode, which is sit on hands mode. The worst thing we could do right now is become a bit bored and start to overtrade this market, as that could lead us to a lot of chop, even if they're very small positions. 6 or 7, 8 small positions in a row, if you're taking all these small losses, can add up. So it's probably best to lay low and do nothing right now. Well, that's a wrap for tonight's video. Thank you for joining us. Have a great weekend, and we'll see you next week.